Hey everybody, Mortgage Rob with Invis again. How are you today? Today I wanted to talk to you a little bit about a mortgage product, and basically it's a little bit, it basically kind of talks to you a little bit about how every mortgage is really not created equal. One of the common recommendations that I make for clients is to consider what's called a readvanceable mortgage product. Few of the banks, actually many of the banks, have a product similar to that. It's like the Scotiabank Scotia Total Equity Plan. First Line has a matrix mortgage. Coast Capital has a multi-purpose mortgage. What it is it basically allows you as a homeowner to take your borrowing needs into your own hands. So you basically take total control over the equity of your home. How it works is, for example, if you've ever had to make a major purchase, like you need to access some money for, maybe it's for a college education, maybe you're wanting to use it as a down payment on a rental property, or you're buying a car or something along those lines, and you have to go through the qualifying process to get new financing. If you've got equity established in your home and you've set up one of the readvanceable mortgage products, it may be as simply as just going into your bank and essentially signing a form to get access to that equity. How the product works is that if you're putting a minimum of 20% down on your home, you can qualify and basically in most cases have an option of taking either a standard mortgage where, for example, if you've been approved for $200,000, as you pay the mortgage down, your mortgage balance just keeps dropping from $200,000 on down. If you've taken this, for example, the step mortgage with Scotiabank, you're approved for $200,000 and your mortgage initially starts as $200,000, but as you pay down that mortgage, the equity that you've paid down is available at a later date, and you don't have to requalify. That's one of the real key things, is that your mortgage could be on a 5-year fixed term and you've paid $20,000 off. Now you want to go buy a car. Well, you could get a line of credit set up for that $20,000. You could get a new mortgage, and maybe it's a shorter amortization or something, set up for the $20,000. So, there's a number of different uses. These products come very handy when you're considering home renovations. If you ever wanted to buy a vacation home, as I mentioned earlier, if you wanted to buy a new car. One of the key things is that it basically is approved, and once you're approved, it's approved in perpetuity. So you never have to go back each and every time you want to access some of your equity. It can be, and one of the big benefits is that it can be just a money saver. If you've paid down, say, $40,000 off your original mortgage, and now you just want to access maybe $10,000 or $15,000 of your equity, to do a second mortgage, you basically have to go through the full qualification process. You got to get your home appraised. You got to go back through a lawyer to register a new mortgage just to get $10,000 or $15,000. So if you've set this up from day one, then getting that $10,000 or $15,000 can simply mean just calling the bank, asking for the access to it, and going in and signing a new document. So it can save you time, it can save you money. It really gives you control over your home equity and gives you control of your borrowing needs, where you don't have to go in and ask and reapply for money each and every time you need it. So it's certainly a very good option for most homeowners that are going to have some decent equity in their homes. If you want to find out if your existing institution can convert your mortgage to that kind of product, feel free to give me a call. If it's something that you need access to equity now, you may be able to put into a second mortgage, and then when your first mortgage comes mature, you can combine the two products. So there's always generally lots of flexibility. With the level of interest rates today, it's really a good time to get a mortgage review anyways and find out where you stand, and if there is, in most cases there's some potential savings that you could have sometime over the next few years. So anyways, that's it for again today. Mortgage Rob with Invis. Feel free to visit my website, www.mortgagerob.ca. Have a great day.